Greetings traders, Jason here with swinghigh.com. It is Thursday, November 19th, and this is your halftime report. Well, things are breaking down hard today. This morning we gapped down and immediately just sold off big time. Most of the support lines were cut through very quickly, almost as if they weren't even there. It's pretty ridiculous. Notice we did not make any attempt whatsoever to fill this gap, so that is incredibly bearish. The markets are down huge right now. Let's take a quick look. SPY down 1.73%. The NASDAQ down 2%. The diamonds down 1.43%. The XLF down 2%. The Russell's Financials down 1.9%, and the IWM, which is the Russell, the Russell 2000 Index ETF, is down 2.8%. Big down moves for broad market indexes today. Let's look at the market internals here. The tick, very bearish. Here's the zero line, that red line going across there. As you notice, almost all of the ticks have been negative today. There's some tremendous selling pressure coming into the markets today. Look at the trend. Wow. The trend hasn't even come below this 1.27 mark. Remember, 1.2 and above is bearish on the trend. A little bit overly bearish this morning, but right now we're in comfortably bearish territory. Basically, a lot of volume is flowing into stocks on the decline. The bears are definitely winning today. The VIX, oh my gosh, the VIX is up 10%. That is, just check out this pop in the VIX. Basically, this morning when I saw that huge pop in the VIX, this really negative trend reading, and SPY breaking down through these support levels, that's when I started to add to my short positions. And right now, all my short positions are looking pretty nice. I will monitor things as they go from here. If we do recover, I will definitely lighten up on those positions, because that would be a very bullish sign, but I don't think that's possible, honestly. There's been so much damage done to the market today, intraday here, that a recovery, into the close would be almost miraculous. Let's look at this 110 mark real quick. I'm going to the 1 minute chart here to show you how this acted as support. As you can see, this morning we sold off past the 110.30 mark. That wasn't really that significant of support. It was support, but not too strong. The 110 was strong support, however, and we cut right through it, even on the 1 minute chart. However, that's pretty much the mark that started to slow our decline. We were really plummeting here, and then we cut through the 110 mark by a little bit, down to 109.93. Then we popped up above it again and then cut down. So we kind of held up here, as you can see, and then sold off the rest of the day. Let's look at the 15-minute chart here. Basically, we have a bear pennant formation here. As you can see, we have a sell-off and a triangle formation. You can draw this a couple different ways, but that's basically the triangle. And those are bearish. They tend to break down to the downside. We'll see what happens with this, though. You could also call that a little bit of a low base, or a bear pullback, whatever you want to call it. Things are looking very bearish today. On the broader time frame, on the daily chart, we are breaking down out of this high base formation. Basically, it is no longer a high base formation. We almost have completely lower action. We definitely have a lower high and a lower low on today's candle. This could be the start of a down leg here, and we'll see where we go. Expect some support at 109 and next major support at 108. Thanks for being a part of swinghigh.com. Check back this afternoon for your post-market analysis. Talk to you later.